For decades, the United States dollar has stood like a towering monument in the center of global finance, commanding the loyalty of markets, governments, and individuals alike. It has been the symbol of trust, power, and stability, the ultimate representation of wealth and control. When nations traded oil, they did it in dollars. When banks held reserves, they held them in dollars. When people across Asia, Africa, and Europe looked for safety, they converted their assets into dollars. The dollar became more than a currency. It became a mindset, a global habit. Yet habits, once formed, become dangerous when the world around them changes. And the world is changing faster than the dollar can adapt. The illusion of the dollar's dominance was built in an age when the world had no true alternative. In the aftermath of World War II, the United States emerged not just as a victor, but as an architect of a new economic order. Through Bretton Woods, through its military strength, and through its expanding industrial might, it convinced the world that stability could only exist under one umbrella, the American financial system. That illusion was so powerful that even after the gold standard collapsed, trust remained. People didn't question the dollar's value. They simply assumed it was eternal. But in reality, it was trust, not value, that sustained it. And trust, once shaken, can vanish faster than any asset can recover. Today, that illusion is beginning to crack. Globalization, once America's greatest ally, has now become its rival. The same interconnected systems that once amplified US economic dominance are now giving rise to alternative centers of power. Technology has flattened the world, allowing nations to trade, invest, and communicate without relying on traditional intermediaries. What happens when global trust starts shifting from one currency to another? The answer is not immediate chaos, but a gradual erosion, an invisible leakage of influence that eventually becomes irreversible. The dollar's dominance created not just a financial system, but a psychology of dependence. Nations borrowed in dollars, traded in dollars, and built entire economic strategies around maintaining access to them. It gave Washington an unmatched weapon, control through currency, sanctions, trade restrictions, and cross-border monitoring all depended on the fact that nearly every transaction passed through the American system at some point. For a long time, this worked perfectly. But the very act of overusing that control planted the seeds of rebellion. Every time a country was cut off, every time a transaction was blocked, another nation began searching for an alternative. Slowly, silently, that search became a strategy. The modern financial landscape is no longer dominated by a single authority. Emerging economies are not waiting for permission to innovate. They are building new rails of commerce and trade. When you look at nations forming bilateral trade agreements outside the dollar system, when you see oil and gas being priced in other currencies, when you observe digital payment systems spreading through Asia, what you're really witnessing is the unraveling of an old illusion. The dollar still stands tall, but its foundation is no longer solid ground. It's shifting sand. There is a profound truth at the heart of this illusion. Dominance in money is not about the paper, it's about the network. The United States built a network of global influence that once seemed unbreakable, but networks survive only when they continue to offer value. For decades, that value was trust, safety, and access to markets. But as inflation grows, as debt rises beyond imagination, and as political divisions deepen, that trust begins to waver. The question now is not whether the dollar can remain strong. It's whether the world still believes it should. Every great empire in history believed its currency would last forever. The Roman denarius, the British pound, the Spanish silver dollar, all were once symbols of global power. Each fell not because of sudden collapse, but because of slow decay. They fell when the world found new ways to trade, new routes to power, and new systems that no longer needed the old ones. The United States is facing the same crossroads. It still has immense resources, innovation, and reach. But it's facing a generation of nations that have studied its model and learned to play the game differently. The power that once came from printing paper is now shifting toward programming value. Technology has introduced a silent revolution. With blockchain, digital currencies, and decentralized systems, money no longer needs to flow through traditional banks or SWIFT networks. The next generation of financial systems will not rely on geographical borders. They will rely on digital ecosystems. And when those ecosystems mature, the dominance of one nation's currency will mean little. The illusion that one piece of paper can control the world will disappear. But illusions do not die quietly. The US dollar's supremacy is defended by decades of institutions, policies, and psychological comfort. Investors still flock to it in moments of fear because it represents familiarity. Yet even familiarity cannot protect a system that refuses to evolve. Every major currency crisis in history began when confidence was replaced by convenience. People continued using the dominant currency not because they trusted it, but because they had no better option. Once that better option arrived, the shift was unstoppable. That is where we stand today. The dollar still commands respect, but the world's respect is conditional. It depends on stability, on innovation, and on global cooperation. Three things that are slowly eroding: debt ceilings rise endlessly, interest rates dance between extremes, and the global economy watches closely for the next signal of weakness. The illusion of strength is being tested by the reality of change. The most dangerous illusion of all is believing that what worked yesterday will work tomorrow. The dollar became dominant because it represented growth, openness, and confidence. But the very system it built has now empowered others to challenge it. Nations are no longer waiting for crises to adapt. They are preparing for them. Every digital trade route, every alternative payment system, and every local reserve strategy represents another crack in the illusion of dollar supremacy. The truth is not that the dollar is collapsing, but that its era of unquestioned dominance is ending. Power in the 21st century will not come from holding the world's currency, but from controlling the world's platforms. The new financial empires are being built, not in vaults, but in algorithms, not on Wall Street, but in data centers. The illusion of the dollar's dominance was never about money. It was about control. And control is now moving to those who understand how to reinvent the very concept of money itself. While the world's attention remains fixed on headlines about trade wars, sanctions, and military tension, a much quieter revolution has been unfolding beneath the surface. China, often portrayed as reactive to global pressure, has instead been executing one of the most carefully planned financial strategies of the modern era. This is not a loud confrontation, not a visible declaration of war, but a silent dismantling of dependency. A long, methodical process designed to erode the dollar's grip on the global economy. The true power of this strategy lies in its subtlety. It doesn't provoke, it prepares. It doesn't announce, it adapts. While the world argues, China builds. Every empire in history has fallen, not because it was defeated in battle, but because another power learned how to replace it without fighting. China's leadership understands this principle better than any modern government. The nation has observed how America used its currency as both shield and sword, how the dollar became a tool not only of commerce but of control. And it realized that no country, no matter how large, can remain sovereign while another nation controls the price of its trade, the path of its payments, and the system of its reserves. From that realization emerged a decades-long blueprint to create a financial ecosystem where China no longer needs permission to participate in global trade. The most visible part of this shift began with the Belt and Road Initiative, a vast network of infrastructure, ports, railways, and trade corridors connecting Asia, Africa, and Europe. But behind the roads and bridges lies a far deeper purpose. The initiative is not merely about physical connection, it's about currency circulation. By financing projects in local currencies and gradually integrating settlements through the Yuan, China created a parallel trade system that could bypass the dollar entirely. Every signed agreement, every funded project, every bilateral trade deal quietly chipped away at the need for dollar settlements. The genius of this strategy is that it was never presented as a rebellion. It was presented as cooperation. But the real masterstroke came in the form of digital transformation. While much of the world debated the legitimacy of cryptocurrencies, China focused on something far more strategic: the creation of the digital yuan. Unlike decentralized coins, this digital currency is fully state-controlled, programmable, and seamlessly integrated into China's payment networks. It allows instant cross-border transactions without relying on us. Controlled systems like SWIFT. For the first time in history, a major economy built a digital currency that can move value internationally without ever touching the dollar. It's a technological leap, but it's also a geopolitical one. With the digital yuan, China has effectively built a financial firewall, a system immune to sanctions, transaction tracking, or external manipulation. Every transaction can occur directly between trading partners, verified and settled on China's terms. This is not just about speed or convenience, it's about sovereignty. It marks the beginning of a world where financial influence no longer depends on the Federal Reserve's decisions or US Treasury policy. The dollar's dominance relies on its indispensability. China's strategy is to make it dispensable. Simultaneously, China has been strengthening its grip on commodities and resources, the backbone of all trade. Gold reserves have been quietly accumulated at record pace. Energy deals with Russia, the Middle East, and Africa are increasingly denominated in yuan, not dollars. Every such deal weakens the psychological monopoly the dollar once held. Even subtle shifts in pricing oil or settling trade in non-dollar terms are symbolic blows against the old order. The world's largest importer of raw materials is no longer content to pay in someone else's currency. Instead, it's building a model where nations trade in a framework that reflects reality, not legacy. Beyond trade, China's vision reaches into technology and infrastructure, the invisible skeleton of global commerce. From 5G networks to e-commerce platforms, digital wallets to logistics ecosystems, it's creating the digital arteries through which future transactions will flow. Each of these systems, from WeChat Pay to Alipay, from cross-border settlement platforms to blockchain-based trade systems, represents another piece of independence. Together, they form a financial ecosystem capable of functioning parallel to, and eventually outside of, the dollar-centric order. But what makes China's strategy particularly effective is patience. Western economies move in election cycles. China moves in decades. Where others chase immediate market reactions, it builds slow and steady foundations. While global investors speculate on quarterly earnings, China is engineering the next century's infrastructure. This patience transforms strategy into inevitability. Every move looks small in isolation. One agreement here, one project there. But over time, the pattern becomes impossible to ignore. The world's second largest economy is no longer seeking to challenge the dollar directly. It's creating a new world where it doesn't need to. It's easy to underestimate quiet power in international economics. Silence often means progress. The United States once used its dominance of the dollar to enforce global rules. But every enforcement creates resistance. Every sanction fuels innovation, and every attempt to isolate an economy forces that economy to evolve. When America blocked financial channels for certain nations, those nations didn't disappear. They learned to trade differently, and China watched every lesson, adapting each into its own playbook. The result is a nation that has mastered the art of resilience. At the heart of this silent shift lies a philosophical transformation. The old system was built on control, the new one is built on connection. While the dollar represents a centralized model of trust, the digital yuan represents distributed power. In this new system, the authority doesn't rest in one country's central bank. It resides in the collective ability of nations to transact without interference. That's why the adoption of China's alternative systems isn't driven by ideology, but by practicality. Nations struggling with sanctions, inflation, or foreign debt see in China's model a lifeline, a path to sovereignty over their own economies. The transformation isn't only financial, it's psychological. For decades, countries believed there was no alternative to the dollar. Now that belief is fading. Central banks are diversifying reserves, investors are exploring non-dollar assets, and corporations are adopting multi-currency trade systems. This doesn't mean the dollar vanishes overnight, but it means the monopoly of belief is breaking. Once that belief breaks, dominance dissolves on its own. The dollar doesn't need to collapse. It only needs to be replaced in enough places for its influence to wane. China's move is hidden not because it is secret, but because it is disguised as progress. Every digital innovation, every trade corridor, every financial partnership looks like development. But collectively, they form an economic realignment. The world is shifting toward a future where multiple currencies, digital and traditional, coexist. And in that future, the dollar is just one of many, not the ruler of all. This is China's silent revolution, a methodical redrawing of financial boundaries that requires no confrontation, no announcement, no threat. It is the power of subtlety in motion, where every transaction becomes a vote against dependency, and every innovation becomes a weapon against control. The old financial empire was built through dominance. The new one is being built through design. While others look for battles to fight, China has already changed the rules of the game by creating a world where the US dollar is no longer the only language of global trade. Every major shift in the financial order begins quietly, then suddenly shakes the world like a hidden earthquake. The rise and fall of empires have always been tied to the stability of their money, and the dollar has long stood as the cornerstone of global commerce. Yet even the strongest stone cracks under the weight of time and transformation. The silent moves China has made over the past decade, creating digital currencies, restructuring trade routes, building gold reserves, and forming alternative alliances, are not isolated events together. They form the tremors of a new financial landscape. The coming shockwave is not a distant theory. It's a chain reaction already set in motion. One that will test the very foundations of how the global system operates. The global financial system was built on the assumption that the dollar would always remain reliable. Banks, corporations, and governments made decisions anchored in this faith. The United States enjoyed what economists call the exorbitant privilege, the unique power to print the world's reserve currency without consequence. Every trade, from oil to electronics, depended on the dollar, and that dependence created an invisible web of control. But when trust in that system begins to weaken, it's not just the United States that faces instability, it's the entire global economy. The first cracks appear not in headlines, but in data, in central banks quietly reducing their dollar holdings, in cross-border settlements shifting to alternative systems, and investors diversifying assets away from dollar-based securities. These actions seem technical, but collectively, they are revolutionary. When the foundation of trust erodes, The effects spread faster than anyone anticipates. Consider how interconnected the world has become. Every major corporation operates in multiple countries. Every bank holds assets across continents. And every government relies on complex debt instruments tied to US interest rates. If the dollar loses even a fraction of its perceived strength, that confidence evaporates across all levels of the system. Debt markets tremble, interest rates fluctuate unpredictably, and the cost of borrowing increases globally. Currencies tied to the dollar weaken, and inflation surges as import prices rise. It's not the fall of one currency. It's the recalibration of the entire network. For the past century, the dollar supremacy created a kind of artificial balance. It allowed the United States to run massive deficits while still attracting global capital. Countries could hold us debt as a form of savings, believing it to be the safest asset in existence. But that cycle is sustainable only as long as everyone agrees to the illusion of safety. The moment another alternative emerges, something faster, more secure, and politically neutral, the logic of holding trillions in US debt begins to unravel. China's digital and trade strategies are building that alternative. The shockwave will not come from conflict, but from preference, from nations choosing to diversify simply because they can. Imagine a future where oil transactions between China and the Middle East are settled in yuan or digital currencies. Imagine African nations funding infrastructure projects without taking dollar-based loans. Imagine major economies reducing their US Treasury holdings in favor of regional or commodity-backed reserves. Each of these shifts might appear small on its own, but together they represent a structural transformation. The global economy runs on momentum, and once that momentum moves away from the dollar, it becomes almost impossible to reverse. What follows is not chaos but realignment, a world recalibrating itself around new centers of power for decades. The United States has maintained influence through its control of global payment systems. Platforms like SWIFT, international banks, and even card networks are deeply intertwined with US regulations, but the creation of independent financial infrastructure by other nations weakens that control China's cross-border interbank payment system. CIPS is an example of how trade and finance can operate outside of American supervision. As more countries adopt such systems, the United States loses visibility over global capital flows, and with that, a key pillar of its geopolitical influence. The shockwave is as much political as it is financial. It marks the decline of monetary hegemony as a tool of diplomacy. This transition will not be smooth. Markets thrive on certainty, and the reordering of global currency systems introduces profound uncertainty. Investors will struggle to price assets accurately when the benchmark itself is in flux. Nations heavily indebted in dollars will face enormous repayment pressures if the value of their local currencies fluctuates unpredictably. The ripple effects will touch everything from housing markets to food prices, from employment rates to pension funds. It is not a question of if these changes will happen, but how deeply they will reshape the architecture of global finance. The rise of digital currencies intensifies this transformation. Traditional banking systems rely on intermediaries, time delays, and regulatory oversight, all of which slow transactions and expose them to political leverage. Digital currencies, by contrast, offer instant cross-border settlement and programmable value. They allow countries to transact on terms that suit their national interests, bypassing the old gatekeepers. Once these systems scale, the advantage of using the dollar diminishes. It's like watching the transition from postal mail to email, faster, more efficient, and unstoppable. The institutions that fail to adapt become relics of a bygone era. There's also an emotional dimension to this coming shockwave, a loss of trust. For generations, the world viewed the dollar as a symbol of reliability, a reflection of American strength and moral authority. But in recent years, that trust has eroded under the weight of political polarization, debt expansion, and weaponization of the financial system. Every time sanctions are imposed, every time assets are frozen, another country learns that financial sovereignty under a dollar regime is an illusion. That realization drives the desire for alternatives more powerfully than any economic argument. The world is not turning against America. It's turning toward independence. When enough countries seek autonomy at the same time, the system built on hierarchy collapses under its own weight. The next global crisis may not be triggered by a stock market crash or housing bubble, but by a sudden loss of confidence in the dollar's neutrality. If major trading blocs begin settling in alternative currencies, central banks will have to rebalance reserves rapidly, selling off US assets to buy others. That liquidation would push interest rates higher, weaken the US economy, and reduce the very stability that once made the dollar dominant. The irony is that the power that comes from being the global reserve currency is also the greatest vulnerability. It binds a nation's prosperity to the world's confidence, and confidence is not permanent. This financial shift also changes how people perceive value itself. For centuries, money was tied to something tangible: gold, land, production. The dollar detached from that long ago, relying instead on trust and military power. But the next era of money will be tied to technology, data, and real-time value exchange. Whoever controls that flow will control the next century's wealth. China's quiet creation of digital systems, infrastructure ownership, and trade corridors positions it not just as a competitor, but as a platform builder. The shockwave will be felt not as destruction, but as displacement. The old system fading as a new one rises. In every age of transition, the greatest danger lies in complacency. The United States still holds enormous influence, but influence alone cannot sustain a system that no longer serves global needs. The shockwave will arrive not as an explosion, but as a gradual awakening, the realization that the dollar is no longer the center of the financial universe, but one star among many in an expanding constellation of currencies, technologies, and trade systems that define a multipolar world. The next era of global dominance will not belong to the nations that control resources, armies, or even money. It will belong to those that control the flow of ideas, data, and innovation. The greatest illusion of the 20th century was that financial control equaled power. For decades, countries fought to dominate banking systems, reserve currencies, and trade routes, believing that whoever managed the world's money supply could dictate its future. But the 21st century is proving something different. Power is shifting from control to creativity, from hoarding to building, from regulation to reinvention. The real question is no longer who owns the money, but who designs how money moves. That subtle difference defines the next global hierarchy. In the old world, central banks and governments were the architects of finance. They issued currencies, set interest rates, and regulated global trade. But today, innovation is happening outside traditional institutions. Financial technology, companies, blockchain networks, and artificial intelligence are rewriting the rules of how value is created, exchanged, and stored. A single algorithm now has more influence on the flow of capital than an entire Ministry of Finance. A single breakthrough in digital payment systems can reach billions of users faster than any policy ever could. The real competition is no longer between currencies, but between systems. The country that builds the most efficient, secure, and inclusive system of value transfer will lead the future of economics. This is where China's long-term vision becomes evident. While much of the world was debating over tariffs, inflation, and interest rates, China was quietly investing in the architecture of the future: digital finance, quantum computing, blockchain infrastructure, and artificial intelligence. These are not separate innovations. They are components of a unified ecosystem. The digital yuan is not just a currency, it's a platform. It allows programmable transactions, automated contracts, and smart trade settlements. In essence, it merges technology with money, turning every transaction into data. Data that can be analyzed, optimized, and leveraged for growth. This fusion of finance and technology represents the new face of power. The dollar's strength came from global trust. China's strategy is to replace that trust with technology. In a world where every transaction is traceable, secure, and instant, people don't need to trust an institution. They only need to trust the system. That's the fundamental disruption. Innovation replaces faith with proof. Power shifts from those who print paper to those who design protocols. It's a transformation as profound as the Industrial Revolution, but this time, it's digital and invisible. While old economies cling to legacy systems and outdated banking structures, new economies are building agile frameworks that evolve in real time. Innovation also redefines what economic freedom means. In the old order, countries gained influence by accumulating reserves, manipulating exchange rates, or controlling trade flows. In the new order, influence comes from participation in networks. The more people, businesses, and nations connected to a system, the more powerful that system becomes. This is why China's approach to innovation is not about isolation, it's about integration through digital partnerships across Asia, Africa, and Europe. China is embedding its financial technologies into the daily lives of millions. Every smartphone that uses Chinese payment infrastructure, every company that integrates Chinese digital logistics, every government that adopts Chinese technology in trade settlement, each becomes part of a global network where control is replaced by connectivity. This evolution is also transforming the role of wealth itself. Money was once static, stored in vaults, gold reserves, and accounts. Now it's dynamic, moving through digital ecosystems, generating value through speed and adaptability. The nation that can circulate value fastest will create the most wealth. That's why innovation is not just a competitive advantage, it's a survival mechanism. The slower a system moves, the less valuable it becomes. In that context, the dollar's centralized structure, controlled by policies, bureaucracy, and traditional banking, feels outdated. The world is demanding speed, transparency, and inclusiveness, and innovation provides that without waiting for approval from old institutions. Another important aspect of this shift is the democratization of influence. When innovation becomes the foundation of power, small nations and independent creators can compete with giants. A small country with a robust digital infrastructure can attract global investment faster than a larger one burdened by outdated systems. A company with a revolutionary payment technology can disrupt entire industries overnight. Innovation reduces the barriers to entry that once defined global hierarchies. It levels the playing field. But it also creates a new form of competition, not for territory, but for intelligence. The most valuable resource of the next century is not oil, gold, or even data. It's the ability to innovate continuously. The world is entering an era where digital ecosystems will define sovereignty. Countries that fail to create or adopt their own technological infrastructure risk becoming dependent. Once again, not on foreign armies, but on foreign platforms. This is why China's focus on building homegrown systems is so strategic. From e-commerce and logistics to artificial intelligence and digital currencies, it's constructing an economy that can function independently of Western frameworks. The US, on the other hand, has relied for too long on the dominance of the dollar as a shield against innovation. But shields only protect for so long. When new players enter the field with tools that are faster, cheaper, and smarter, the balance of power shifts naturally. The global economy of the future will operate on interoperability, not control. Instead of a single reserve currency, dictating global trade. Multiple currencies, digital and traditional, will coexist within programmable systems that automate exchange and minimize friction. Transactions will no longer depend on human decision-making, but on algorithms optimized for efficiency and fairness. In that world, political power will mean less, and technological leadership will mean more. The global reserve currency might not even be a currency at all. It could be a platform. Whoever builds that platform will hold the true key to the global economy. Innovation also carries a philosophical transformation. Control thrives on fear. Innovation thrives on curiosity. The empires of the past maintained order through dominance, but the leaders of the future will maintain influence through attraction. People will align with systems that empower them, not restrict them. Innovation offers empowerment. It gives nations the ability to trade freely, citizens the ability to create wealth independently, and businesses the ability to scale without friction. Control, by contrast, slows progress, traps creativity, and breeds resistance. The world is realizing that prosperity comes not from guarding the gates, but from opening them. We are witnessing the decline of control-based economics and the rise of innovation-based ecosystems. The dollar's dominance was built on the promise of stability, but stability without evolution becomes stagnation. In contrast, innovation evolves by design. It learns, adapts, and reinvents. The countries that invest in this process will define the next 100 years of economic leadership. The ones that cling to control will find themselves bypassed by systems that move too fast to regulate, too flexible to contain. The power of the future will not be measured in vaults or reserves, but in code, algorithms, and networks that connect billions seamlessly. Innovation is the currency of this new world. It cannot be printed, borrowed, or sanctioned. It must be earned through vision, creativity, and courage. The nations that understand this truth will rise naturally, while those that rely on old mechanisms of power will slowly fade into irrelevance. The digital economy rewards imagination over intimidation, progress over politics, connection over coercion. And in that transformation, a new order is forming, one not ruled by who holds the money, but by who dares to reimagine what money can be.